Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Today, we're talking about a company which has moved from strength to strength over the last 1 year. Hitachi Energy India. The code name on BSE is Power India. Now, this used to be a part of ABB India back then, and well, we've seen the company will eventually become a JV with Hitachi back then. So it was ABB Power Products and Systems. And in 2020, Hitachi and ABB Power Grids business formed a JV. And that's when we got this particular business. On December 22, ABB divested its balance in this particular JV. And since then, we only had Hitachi. And well, since then, it's also called Hitachi Energy, fully transitioned into Hitachi Limited. Now, and which is why at the moment, this is Hitachi India. What does this company do? Well, composed of 4 business units. The first one is grid automation. That's also followed by grid integration. Well, I'd reckon that to a certain extent, smart metering also forms a part of this. High voltage products and transformers are the other 2 aspects of this. And as we know, the transformers industry sector has picked up substantially over the last few quarters. In terms of its key clients, it does serve the utility space particularly, and as I was talking about smart metering, but besides that, industries, transportation, data centers and infrastructure sectors as well. That's where the gamut lies with respect to where the clientele comes from for Hitachi India. But on that note, let me talk about, once again, the factors that have determined how Hitachi India has moved. So as usual, we talk about the fundamentals of the company. We talk about how the company has done over the past few years in terms of your revenue and profitability, growth, what sort of an order book it has, because it'll give you a better visibility with respect to the order book coming in. Then, of course, we have the balance sheet. Let's not forget the cash flows, of course, are important. And all these will form an important part of your income statement. Financial statements. But moving beyond just that, we also talk about the shareholding, street credentials, which will mean how the company is done in terms of its price action, the current valuation picture, and the street coverage as well. And joining me at this point in time is my colleague Anushi, who's also going to give us a lot more in terms of insight as far as this particular company is concerned. Anushi, welcome, and thanks for joining in. Let's start by talking about how things have panned out for the company's revenues and profitability. I reckon that the quarter gone by has been a strong one, which is why I believe that's also locked in upper circuit right now. But the last 9 months have also been strong. What can you tell us about all these aspects?
So, Agam, let's see how the company has been doing since FY22, and then we'll take the Q3 and the 9-month picture into consideration. So, looking at FY22, 23 and 24, so if we are seeing the figures over here, in 23, we did see a dip in sort of where the revenue growth is concerned, but then FY24, we had a double-digit growth coming back for the business. So, on the revenue front, it has been going strong. Even if you look at the Q3 numbers, 27% of a revenue growth is what we are looking at. And even 9 months, this is also 27% of growth is what we are seeing. This is with a revenue of 4,501 crore at the end of 9 months of this financial year. As compared to, if you look at FY24, that figure stood at the total revenue for FY24 was 5,237. So comparing FY24 to, and just now that 1 quarter is remaining, we are looking at a significant amount of revenue growth in terms of where that is concerned. EBITDA margins have remained majorly in the 6 to 7% of range, with the EBITDA seeing a little bit of dip in FY23, and 24 it picked up again. Net profit, we've seen significant growth from 23 level onwards. Now, if we take yesterday's numbers in consideration, the company came out with its numbers yesterday. So here we are looking at EBITDA was up around 146%, margins stood at about 10% versus 5.3%, and net profit at 137 crore as compared to 23 crore. In the 9-month performance, we are looking at margin expansion to 7.94% in comparison with 4.7%, and net profit seeing about a 299% of a jump. So this is in terms of the operational metrics. In terms of where the income statement is concerned, we are looking at this sort of growth.
Okay, so that's as far as your income statement is concerned. I'll talk to you about the order book, and the order book does seem to be very strong at the moment. At present, the total order book stands at around 19,000 crores. It has won orders worth nearly 11,500 and in fact 11,600 crores for the quarter gone by in the third quarter. However, we must remember that this is on account of one very large order, and this is for the Khavda-Nagpur HVDC order. If you leave that on the side, it's still a relatively large order inflow. And given the fact that we have 19,000 crores in terms of your revenue, on an average, the company is slated to do around 5,500 to 6,000 crores. And I'm making an assumption here. It does look like it has a visibility of another 2.5, 3 years, and this is just based on the current order book. We must also remember that the fourth quarter is the quarter in which you tend to have a higher amount of awarding activity. So it's going to be a wait and watch in terms of what kind of orders does the company get. And where does this overall order book stand at towards the end of this financial year, and that will give us a much better idea in terms of visibility. That said, when it comes to your current order book at around 19,000 crores, it's certainly a very, very healthy one, and it does give you a good amount of visibility over the course of the next few years, which is possibly why we're looking at the valuations at which it is currently trading at. But we'll come to valuations in some time. Let's talk about the balance sheet as well. Anushi, what can you tell us here?
Right. Before we go to balance sheet, I just want to make a quick mention in the order book that you've mentioned. This surge that we are seeing in the order book is because of the HVDC orders.
Yeah.
And the company is very focused on increasing the shares of these HVDC orders that are there. In fact, they're bidding for higher projects as well. So that is something we can keep a track of, and how this higher order books in terms of execution, what this could mean for the business going ahead. But where balance sheet is concerned, we are looking at a net worth of about 1,360 crore. This in terms of where the short-term debt is about 150 crore and with a cash balance of 128 crore. So it's a healthy balance sheet figure that we are looking at if you take the debt and the cash account in consideration. So even the financial metrics over here for the balance sheet looks healthy. But cash flows also, I think it's a similar picture that we are building on, right?
Right, absolutely. It is, good cash flows from operations are pretty steady. So if you look at FY23 and FY24, again, 352 crores from FY23, that's cash flows from operations, and 250 crores from, FY23. Maybe in terms of the net cash flows, you've seen actually an outflow in FY24 to the tune of nearly 199 odd crores. But given the fact that you have a positive stance coming in from CFO, that's cash flows from operations, it's going to be pretty steady, which is why we're giving it a thumbs up here as well. I'm going to shift focus to the shareholding as well at the moment before I toss it over to Anushi for the street credentials. In general, if you consider how things are panning out for the company, since, of course, it's, since ABB products have moved out, we have Hitachi India, which holds about 75% in the company. That has remained steady. There's been no change. What we have seen over the last few months, that is the first 9 months of this financial year, is that your FII holding has increased by nearly 1%. Consider the way things are panning out for FIIs and DIIs. These are positive moves as well, which is why we're going to give it a thumbs up. Besides the fact that the promoters hold 75% in the company. So that's certainly a positive as well. And Anushi, I reckon that it's done very well as well in terms of price action.
Absolutely. If you see the last 2 years price performance, it's gone up around 4x. So a multi-bagger for all the investors out there who were looking to invest in the stock 2 to 3 years ago. If you look at 1 year chart and also 1 year performance, in fact, they are looking at gains of around 100% plus. So in terms of where the street credit is concerned, in the last 6 months, however, we've seen about a 3% of a growth. But let's see that even if it's peers, if we take those in consideration also, they have done more or less similarly to what Hitachi Energy is doing. But over the long term, it's been a multi-bagger for the investors out there in terms of where the street performance is concerned.
Okay, so a very good performance out there. I'll talk to you about the valuations. And valuations look rich. There is no doubt about that. So Hitachi Energy currently, I'm going and I'm making an assumption that it will make about 400 crores in terms of its bottom line. Do remember in the first 9 months, the company has already made 200 crores in its bottom line, which is why, 400 crores may be a tad bit on the higher side is in terms of the expectations. But even if you consider, 400 crores on the bottom line and its market capitalization currently standing at around 51,000 crores, that comes to your price to earnings ratio for the ongoing financial year at around, well, 127 times. It looks expensive. There's no doubt about that. What if the company doubles its revenues in FY26? Under those circumstances, its price to earnings ratio comes down to around 65 times, which is still on the higher end, especially if you consider the price to earnings at which ABB, CG Power and Siemens are going at. Sure, CG Power is also currently at around 94 times. And, if you compare it to Hitachi Energy, again, it's comparable. CG Power is at a discount as compared to Hitachi Energy. But we must also keep in mind the kind of growth that all these companies are seeing. So it's like it's about a double-digit growth for ABB and Siemens. CG Power, will it depend on the kind of year it has and how it converts a lot of its opportunities. But Hitachi Energy, it does look like it's going to look at around 25% growth in terms of your top line, and that will have a consequential impact on your bottom line as well. That's as far as your growth is concerned. Now, so the question comes down to, what does it mean for ABB as well as Siemens India? The other aspect that we need to remember is that ABB follows the calendar year as the financial year, and Siemens India follows the October to September period as the financial year. So, that's where we're also, we have different periods, slightly different periods when we're considering the price to earnings ratio at the moment. However, if you forget all of this and just keep in mind as to how your current valuations are stacking up at the moment, what we are noticing and what we are seeing is that Hitachi India is at the moment more expensive as compared to its other peers, but there is a reason behind it, and a faster profitability growth is the reason why it's been ascribed such a high price to earnings ratio. That's as far as valuations are concerned. But Anushi, what can you tell us about street coverage then?
In terms of street coverage, we don't have a lot of analysts tracking this company. We have around 4 analysts who have a buy call on this one, while 1 have a hold and a sell call respectively. So the upside potential building up to for this is around 27%. But that is as far as where the street coverage goes. But I do also want to talk about the outlook that the business has given. So in the last quarter, if we go back and check what it announced 2,000 crore of a capex, which was for the next 4 to 5 years. And this was across their various segments, which is that's transmission, distribution, data centers, and railways as well. And the investments would be utilized for green hydrogen and power transmission business. Guidance, now if you look at that, the standout point of this result was also its expansion in the margins that we are looking at. So this is in line with their target of achieving the double-digit margins picture that we are holding. Along with that, we also spoke about the order book, wherein we are looking at more than 100% of a jump in terms of where the order inflows are concerned. So with the company bidding on these several HVDC projects and expecting at least one of these to finalize, we should see how the execution of these could come into picture, what is the timeline for that, and what this growth could bring for the company going forward.
Okay, so there you have it. So if you consider all these factors, it does look like Hitachi India has done well. It's slated to do even better based on the kind of visibility of its order book right now and the kind of quality of orders that it's making. But where does that leave us in terms of the total rating, in terms of all the things that we have discussed so far? So if we were talking about the income statement, the balance sheet, the cash flow statement, the order book, they were all thumbs up. Shareholding, again, and along with street credentials in terms of how the price action has panned out, it's a thumbs up again. In fact, again, locked in an upper circuit after moving below the mark of 9,000 rupees a share, moving back above the mark of 12,000 rupees a share. Valuations, they do look expensive at the moment. As Anushi was mentioning, they're also vying and going in for a relatively larger number of orders, the kind of orders that they've already had in the quarter gone by, and which is why the street is probably, that's the reason why the street is ascribing that valuation. The street coverage, of course, is the other one. And based on all these factors, what we have come up is around 6.5 out of 8. For a thumbs up, you get a mark of 1. For a neutral, you get a mark of half, and nothing for a thumbs down. So overall, certainly in a very good space as far as Hitachi India is concerned. But let's take this conversation forward, where we spoke to the management of the company as well. And we spoke about the quarter gone by, the visibility going ahead. And well, we caught up with Mr. N. Venu, who is the MD and CEO of India and South Asia of Hitachi Energy. And this is what he had to say. Listen.
So this quarter three for us has been a very strong, solid performance in all key metrics. And our orders have grown in this quarter almost 800% year on year, driven by HVDC order, which we have booked in this quarter. Our revenues were higher, almost 31% in year on year. And our EBITDA margin expanded 380 basis points in this quarter. And in addition to that, our other growth levers, exports have also performed very well, and then service has also performed extremely well in that. So all of them have combined together in addition to our execution and operational excellence have added our margin and improvements in that. We have also have very robust order backlog, almost close to 19,000 crores order backlog, which has got a visibility of quite a long quarters of revenue going forward in that. But even if we leave our large HVDC order, our base order also has a solid growth in that. So all of what we have been saying is that we have been investing in India, we are manufacturing, localizing it. That way we are creating a very competitive portfolio, and with that we are able to win the orders and create the order backlog. And from order backlog, the revenue growth is happening in that. So we expect going forward also, we grow in line with the market or above the market, and we continue to expand the revenue growth.
All right. So at the moment, your order backlog being around 19,000 crores, what sort of an order visibility, what sort of a business visibility does this give you? Over what span in time? How much of this is executed over FY26? And what about the balance? What are the timelines that you're working with?
Yeah. So, we don't give that, how much of the order backlog will go into the each, quarter-wise or financial year-wise. All we can say is that, when you have a strong order backlog, and that will give you, growth in the revenue going forward. And that's exactly what happened. Even if you look at our 9 months of this year, so we have our revenue is around 4,500 crores, which is we have grown almost close to 25-26% on a 9-month basis in that. We believe that this kind of growth is sustainable going forward. A few percentage this way, that way, but that's how we are looking at it. All in all, what we say, we have invested here, we are continuing to invest, and we want to grow in line with the market or above the market, and not only in India but also in other parts of the world where we sell our products.
So, and how is your overall business split between grid automation, grid integration, high voltage products, and transformers?
Yeah. So we have not been giving that, but all I can tell you is that our transformer is one of the biggest portfolio, and followed by grid integration and high voltage, and then grid automation. So
and so is this mix likely to change in the upcoming quarters and years, or do you think that it will more or less be this way?
It more or less will be there. Maybe at some point in time, with a lot of HVDC revenues come in, then grid integration business might almost come in the same level or slightly above level. But that's how it's almost in the same level, because if you look at the energy transition tailwind, you need all our portfolio. You need our transformer portfolio. You need our high voltage portfolio, automation, HVDC. So the growth is also what we have seen, across all our businesses.
Right. So in that case, considering you have such a robust order book at the moment, what can you tell us about your requirement of working capital, also in terms of expansion? Do you think that you guys will be needing more funds Under those circumstances, will you eventually look to raise funds through debt or equity, or are at the moment internal accruals good enough for you to go?
So as you know, this quarter we have also, including advances we have received from the large order, and also a very high focus on our cash. So we become, as of 31st of December, we have a debt-free company. But having said that, we are looking for expansions. In October last year, we announced expansion of our facilities worth around 2,000 crores, and then we have also announced. On 18th of January, our board has approved to raise the capital, and which is basically the enabling resolution, and which gives the flexibility for us, to quickly raise the capital as and when it is required for our growth opportunities.
Okay. So, and in terms of the latest orders, I believe in Q3 you clocked an order inflow of well over 11,000 crores, if I'm not mistaken. And please correct me if I'm wrong there. Where are these orders coming from? What areas are these orders coming from?
So the 11,594 crores, what we have received orders in the quarter that includes an HVDC project, which also includes our data center orders and the renewable orders, and also the export and the service orders. So this is how has been the thing. And we have, from the segment standpoint, it's the utilities, industries, data centers, renewables have clocked very high double-digit growth. And we have a bit of slowdown in this quarter from the rail segment. Otherwise, barring that, the rest of all the segments have really given a huge amount of growth in this quarter.
Sure. So I also want an understanding on the current capital expenditure environment. What is CapEx looking like? Of course, we have the upcoming union budget where we're expecting the government to also make a little bit of an outlay here with respect to capital expenditure, maybe spur it a little bit further. Your expectations from the government and what can ideally work and play out in favor of your sector?
Yeah. So my expectation on the budget, if you're talking about, is basically, we expect that the government to continue to focus on investing on the infrastructure, which is very, very crucial on that. So rather, they should further increase the outlay for the infrastructure spend. So then the second wish from my side is that, the energy transition tailwind is a huge, and it's a big opportunity for India to really position well in terms of the technology, and we are extremely doing very well in adoption of the renewable, etc. But we expect that the government to provide some kind of production-linked incentives for a critical equipment like semiconductors, which are required for the energy sector, like HVDC equipment, which is required for this energy sector, and also many other critical elements which are required. So that will really fuel huge amount of manufacturing ecosystem in India.
So there is this aspect of one-time large order for the HVDC. I reckon that to a certain extent that has pushed up your order inflows and your order backlog. So my question then is, in terms of expectation, in terms of order inflows, what sort of a number can we expect ballpark over the next few quarters? Of course, we also must consider the fact that we are going into the fourth quarter, which is seasonally a quarter in which a sector like yours sees the largest amount of inflows in orders. So can you give us an idea about what the next 2 or 3 quarters could look like based on your conversations with clients?
Well, what I can tell you, yes, this quarter has been largely driven by a large HVDC order, and this HVDC order will not repeat in every quarter. That's also a thing. But as I said, if you take out this large HVDC order, our base order growth is also very robust in this quarter. So all I can say and confirm that, on quarter, our order inflows growth will be there. Depending upon the market situation, at least a high single digit to high double digit is what we are looking at.
All right, that's the management of Hitachi India telling us about what's in store for the upcoming years. But on that note, we are out of time on this edition of KYC. Lots more lined up on the other side. Stay tuned in.